Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be going through an illustration where it'll have variety of adjustments. Now in the earlier illustrations where we have learned just about one or two adjustments like closing stock, etc. We'll be going through different kind of adjustments which will include closing stock, depreciation, manager's commission, any other additional adjustment that you would find in the illustration which has been listed down here. Now we'll be further going through the preparation of trading account, profit and loss account and balance sheet in detail, and how to deal with numerous adjustments being a part of one specific sum itself. So let's figure it out. So when we talk about complete adjustments problem, we basically try to cover majority of the adjustments within one illustration itself. That's what we have done with the attempt of this illustration. So what we'll be doing through right now is that we'll be going through all the details that has been mentioned here. It will consist of different adjustments, but before that, we'll just go through the trial balance that has been mentioned for us. That means for our reference, and then we'll further prepare the other items that are supposed to be a part of this illustration or a part of this mathematical sum. Now, when we talk about mathematical sum, the reason why I've mentioned it as mathematical sum is because there are a lot of calculations in here. So make sure all your calculations and all the adjustment items are done correctly so that you have a flawless balance sheet prepared at the end of it. And in this specific illustration, we will be tallying the balance sheet amount. That means just to rectify whether the asset or the liability side is matching up together and that there are no errors in here. So let's go through the illustration that has been mentioned here, after which we'll start with the working note and then we'll further note down the preparation of trading account, profit and loss account and balance sheet. So let's go with the illustration first. They mentioned that following are the ledger balances in the books of Mr. Mahesh for the year 1987. The year ends in 30th of June 1987 and all these debit balances and credit balances have been mentioned here. Let's go one by one and we'll mention the items which are supposed to be a part of trading account, profit and loss account and balance sheet with the abbreviations that we have already learned. T for trading, P for profit and loss and B for balance sheet. Let's go with the debit side first. Opening stock is a part of trading account, hence it will be under trading abbreviation. Purchases which has been mentioned is also a part of trading account, hence we'll have trading account or the account that will be debited further or the specifications that will be a part of it will be trading account. Sales return is an adjustment or probably a total item which is supposed to be a part of trading account, out of which that amount will be subtracted from the net sales or the total sales to figure out what is the exact amount of sales that has happened. Hence, it will be a part of trading account. Wages, again, is a part of trading account. Hence, it will be on the debit side of the trading account. Carriage on purchases is a part of trading account because it is an expense that is paid as a delivery expense for all the raw material that has been taken in for consideration or for production of materials. Duty and clearing charges is a part of office and administrative expense, hence it will be a part of profit and loss. Salaries, on the other hand, which has been mentioned, is also a part of profit and loss, hence it will be an expense mentioned on the debit side of profit and loss account. Taxes and insurance is again an administrative expense, hence it is a part of debit side profit and loss account. Advertisement again is an expense which is mentioned on the part of or as a part of administrative expense, hence it will be a part of profit and loss account. Now drawings that has been mentioned in the trial balance will be a part of balance sheet and that will be subtracted from the capital. Bills receivable is an asset, hence it will be a part of asset under current assets part or current assets segregation or category. Debtors again will be a part of balance sheet asset side, hence we'll be mentioning it under current asset category, but make sure these are certain items where you might have certain adjustments related to this specific item. So try to keep these amounts in the inner column, which will make your life easy while solving all these trading account problems, or to adjust any of the adjustments that are given, or to make sure that all the adjustments that are mentioned in the illustration are incorporated without writing all the totals or without making any additions or subtractions in the outer column, because the outer column should only consist of the total amount or the net amount. all the calculations that has to be done should be done in the inner column itself. Cash in hand is again a balance sheet item as it's termed to be a current asset. Building also being an asset for us, a fixed asset, hence it is a part of balance sheet asset side. The next two items, furniture and machinery, are also a part of balance sheet asset side items, hence they will be mentioned in the preparation of balance sheet. Printing and stationery is an office and administrative expense, hence it will be a part of profit and loss account. Interest on bank loan is also a part of administrative expense. That is the reason you will find this item in the debit side of profit and loss account. Now with this we have cleared all the items which are related to debit side of any trial balance. Let's figure out on the credit side and what details have been mentioned there. Capital has been mentioned, which is a part of balance sheet liability side, out of which the drawings which we have learned earlier will be subtracted. Sales is a part of trading account, hence it will be a part on the credit side of trading account. If there are any sales return, hence this item will be mentioned in the inner column first. That means the amount of this specific will be mentioned in the inner column. If there are any sales return, that will be subtracted, and then the outer amount or the column in the amount, whatever amount you get, or probably the net amount you get after reducing the sales return from the sales, will be moved to the outer column itself for your clarification. Purchase return has been mentioned. This is an amount which will be subtracted from the trading account, or rather from the purchases which is mentioned in the trading account. Next item which has been mentioned here is provision for bad and doubtful debts. It is mentioned on the profit and loss account. We'll figure out if there is any adjustment related to this item when we go through the adjustments in the next sheet. Next item which has been mentioned is 12% bank loan, which is a part of liability, hence it will be mentioned on the balance sheet liability side, current liabilities basically. Next item that has been mentioned is sundry creditors, again a part of balance sheet liability side. Rent received is the item that has been mentioned here. So rent received will be a part of profit and loss credit side, that means income received. The last item that is mentioned here is discount. Again, that is a part of administrative income. Hence, it will be mentioned in the profit and loss category. That means profit and loss statement credit side. With this, we have cleared all the items that are referred or related to the trial balance. Now, let's figure out what are the adjustments that are mentioned in here. And after that, we'll further go ahead with the preparation of trading, profit and loss account and balance sheet. Now, as you can see, there are certain adjustments that have been mentioned down here. We'll go through each of these adjustments and see what is the effect. That means which side will we have the details, or what are the effects under which category will have trading account being affected, profit and loss account being affected, and balance sheet being affected due to these adjustments. Let's go with the first one. The stock on 30th of June 1987 was valued at 26,800. Now this adjustment refers to closing stock adjustment. Hence, the first effect will be you will have this specific item mentioned in the credit side of trading account and also in the balance sheet asset side. I'm mentioning down the effects here so that you can also jot down these details. It will be very easy for you to understand which all accounts are getting affected, so that that amount can be kept in the inner column itself. And once these adjustments are further dealt with, we can go ahead and see what is the net amount that is being transferred to the outer column. So first adjustment, two effects. First, trading account credit side. Second, balance sheet asset side. The proprietor had taken away goods worth rupees 3,000. This was not recorded into the books of account. Now, this adjustment refers to drawings. Hence, this will also have two necessary items or two necessary adjustments. First, that it was not recorded, we have to record it. That means we have to subtract it from the purchases because it is a drawing of goods. So that much amount has been taken out from the owner or by the owner. Hence, that much amount will be subtracted from the purchases, and similarly, the total of this will be added to the drawings that we have already mentioned in the trial balance, and that will be subtracted from the capital amount, that means in balance sheet. So if you can see, we have figured out the details. That means how the adjustments will have dual effects and how these dual effects are supposed to be adjusted. So now you know that drawing which has been mentioned in the trial balance should be mentioned in the total, or probably we can mention it in the inner column, so that this amount can be further subtracted from the capital amount, because drawing is anyway going to get subtracted, which has been already mentioned in the trial balance. In addition to that drawing, this amount will be added, and this amount will be also subtracted from purchases because this hasn't been recorded at all. Let's go on to the third adjustment. Depreciate machinery at the rate of 20%. It's a very simple adjustment. That means 20% depreciation on the machine value first will be mentioned on the profit and loss account debit side because it is an administrative expense. Second, the same depreciation amount will be subtracted from the machinery account. Hence, machinery account, which has been mentioned in the trial balance, will be mentioned in the inner column, so that after you subtract this depreciation, whatever balance has been left will be moved out to the outer column. I hope this is very clear. Provision for bad debts rupees 1500. Now this provision is further created, so we already have a provision account mentioned in the trial balance. This amount will be subtracted from that provision because something that is already existed and the provision required right now is subtracted. So whatever balance will be there will be a part of the additional provision that has been left in trial balance. After that, the second adjustment that you have to do is that you have to subtract this amount from the debtors account. So this is the doubtful or provision for debtors that we have created for our references. So I hope this is very clear. First adjustment, you have to subtract it from the provision. Had it has been already mentioned in the trial balance. Second is subtraction from the debtors account. Now, the last item which has been mentioned as a part of adjustment is very tricky. So, listen to this very carefully. Let's go ahead and prepare the trading account and profit and loss account, after which we'll be preparing these details. So, listen to this very carefully. We'll be preparing the trading account and profit and loss account first, after which we'll be going through details of how to pass this adjustment. Let's read that adjustment first and then we'll be able to understand. It says provide for manager's commission at the rate of 10% on net profit after charging such commission. That means whatever commission is supposed to be provided to the manager at the rate of 10% is on the net profit after charging such commission. So I'll let you know how to solve this thing while we do the working on this specific transaction or this specific item. Let's go ahead and figure it out how to prepare the trading account first. So now that we have prepared this specimen of trading account, let's record all the items that are supposed to be a part of trading account, and then we'll see how we have a net profit or a gross profit here. That means whether we have gross profit or gross loss. So let's figure it out. So now that we have mentioned all the items that are related to trading account, debit side and credit side both, we'll figure out the interim balances and we'll see whether we have gross profit or gross loss in this situation. Before that, whatever inner column items are supposed to be mentioned in the outer column, that means after totaling, we'll do that first and then we'll figure out the interim balance. So let's get it done. So as you can see that we have prepared the trading account and we have figured out that the debit side has a lower balance as compared to the credit side, which clearly states there is a gross profit here. Hence, once we have a gross profit here, that means in such a scenario, this gross profit will be further moved to the net profit or the profit and loss account credit side. So now that we have gross profit here, let's figure out what is the amount of gross profit that has to be moved to the profit and loss account. So this will mark the closure of trading account with every adjustment being taken into consideration. So now that we have figured out the gross profit, we'll next prepare the profit and loss account. This gross profit 63,300 will be moved to the credit side of profit and loss account, making or marking the start point of preparation of profit and loss account. So let's prepare the profit and loss account now, and then we'll figure out whether we have a net profit there or a net loss there. So now that we have prepared a trading account whereby we have figured out that we have a gross profit of 63,300, we'll further move that gross profit to the preparation of profit and loss account. Let's prepare the profit and loss account and figure out whether we have net profit or net loss here. So we've prepared the specimen for profit and loss account. Let's figure out the gross profit transfer first and then mention all the items with the necessary adjustments related to profit and loss account. So if you can see in this sum, we have prepared the interim net profit. That means after adjusting all the depreciation adjustments, then provision for bad debts being adjusted in this specific profit and loss statement, we have found out the interim net profit. Now, if you remember, there was an adjustment, the last adjustment that was mentioned, that means manager's commission at the rate of 10% after charging such commission, and that is on net profit. So if you read that statement again, which states that we have to provide manager's commission at the rate of 10% on net profit after charging such commission. Hence, this specific commission will be a part before actual net profit. The actual net profit is not yet decided yet. That means we haven't found out the actual net profit, because out of the interim net profit that we have figured out right now, we have to deduct manager's 10% commission on this. Now, how do you calculate a manager's 10% commission on this? I'll get the working sheet again and then we'll figure out how to calculate this. We'll prepare one thing here, that means a working right in this statement, so that you can understand how this manager's commission has been figured out. Now, imagine if this includes manager's commission. That means if the net profit is 100% and 10% on that net profit is included in this interim profit. Hence, we have to figure out how much is the actual net profit here. So, whatever amount is included in here includes manager's commission as well. So, how to figure it out? Let's find it out. So if you can see that we have mentioned here 48,740 is including 10% of manager's commission. That means if the net profit is 100%, additional 10% is included in this net profit. That means this would be 110%. So if this is 110%, how much is 100% here? So it's a simple cross multiplication that you have to do, which will give you the exact amount of manager's commission being a part of this. So if you cross multiply and divide, you will get an amount here. That means 48,740 into 100 divided by 110. Let's calculate it. That gives you a total of 4430.90, rounded off to the nearest one is 4431. So this much amount is the manager's commission that was included in 48,740. So once you subtract this amount from 48,740, you will get the actual net profit of the profit and loss statement. So the net profit that we have figured out is 44,309. That is the actual net profit of this specific profit and loss statement, which will be now moved to the capital account under the liability section of the balance sheet. So I hope the last adjustment was pretty clear. We have also taken 20% depreciation of machinery into consideration in this specific profit and loss, as we have mentioned it in the adjustment solving or the working note of it. And the provision for bad debts was also subtracted from the existing provision that we have. So existing provision of 2,000, out of which the provision that we required to create is 1,500. So we still have an additional provision of 500 which is left with the existing provision. Hence, that will be the balance that is taken out in the outer column. So I hope this gave you a lot of clarity on how to solve manager's commission problems when it comes to profit and loss preparation and how to charge it, especially when the net profit is supposed to be calculated, or it is supposed to be calculated on the basis of the 10% or 20%, whatever criteria has been mentioned under the manager's commission part on net profit. So now let's prepare the balance sheet and figure out whether we have both the asset and the liability side totaling up with the same number or not. So let's prepare the balance sheet in the next slide. So we have prepared the specimen for balance sheet. We'll now go ahead and prepare the actual balance sheet with all the necessary adjustments being taken into consideration. Let's prepare the balance sheet first and then figure out whether we have the total of assets and liabilities matching up or not. So now that we have mentioned all the items in here, whereby we have stated the balance sheet items as well, that means the one that were mentioned in the trial balance, as well as all the necessary adjustments, like first, outstanding commission. That means the manager's commission has been mentioned on the liability side as it is an outstanding amount. As it was an adjustment, hence it would have two effects. First, it would have been mentioned in the profit and loss account debit side. Second, it would have been added into the liability side. Second one, that means after that part, depreciation has been subtracted from the machinery value and the final amount of machinery has been mentioned in the outer column. Third, debtors, that means the total sundry debtors has been subtracted from the amount of provision for doubtful debts or bad debts has been subtracted from that amount, and the next outer column will contain the total amount of debtors. That means total debtors minus the amount which has been subtracted as a provision. Hence, the final amount will be mentioned in the outer column. These necessary adjustments have been made. Apart from that, capital account, that means the total of capital account has been added up with the net profit and subtracted with the total drawings. That means the one that has been mentioned in the trial balance as well as the other 3,000 that were mentioned in the adjustments have been totally added for 8,000 rupees, because trial balance had a total of 5,000 of drawings and adjustment had a total of 3,000 of drawings. So total of 8,000 will be subtracted from here. After all these necessary adjustments, we'll take all the outer column amounts and figure out whether we have asset side total equivalent to the liability side total or not. If it is not, there is certain error that we have figured out, or we have to figure it out whether in the trial balance, whether in the trading account, whether in the profit and loss account. But if there is no error, that means you need not worry about it. Your trial balance and trading account, profit and loss account is absolutely fine. You just need to tally it with the balance sheet. Assets should be equal to liabilities. Let's figure it out whether in this illustration we have been able to, or whether we have managed to make sure that the asset is equal to the liabilities total. Let's figure it out. So the asset side total that we have figured out is 1,32,300. That means we now require to figure out whether the total of liability side is equivalent to asset side total. So you can do the calculation on your own. I'll do it here, and let's figure out whether we match up to the assets equals to liabilities or not. So if we can make the total of liabilities and asset, it equivalents, or that means it proves that liabilities is equal to the assets total. Hence, we can conclude that the balance sheet has tallied and we have been able to successfully close down the sum related to complete adjustments of balance sheet preparation. So I hope this sum gave you a lot of clarification about how to deal with different kind of adjustments. Some might be tricky, some might be very simple, some might have more number of accounts to deal with. Something will be very easy here, something will be very tricky here. You just need to pay attention while solving these items, and the most important thing is to segregate everything and to make sure that each and every item has been mentioned in this statement. Because in case while mentioning all the items from trial balance, if you figure out that you have lost certain items there, or if you have misplaced or you didn't mention any of one of those items rather out of those trial balance items into this specific statement, the question might go wrong and you might lose marks on this specific question, which is scoring in nature. So I hope this sum gave you a lot of clarity as to how to solve different items or how to solve different adjustments and what are those effects and how to place those effects rather into different books at one single point of time. That means into trading account, profit and loss account and balance sheet. Hence, thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.